With the first half of 2021 in the rearview mirror, what are the major trends that define the last 6 months? And can they tell us anything about the next 6 months so we can make some money off them? After a day where the Dow gained 104 points, S&P advanced 0.34%, new record, and NASDAQ edged up 0.01%, another new record. I see a lot to like in the second half. However, I recognize that there's some real negatives here. Breadth is bad. Treasuries seem to be signaling some sort of slowdown with yields falling to ridiculously low levels. I mean, that's why tech keeps soaring, because those are the type of growth stocks that thrive when the economy cools off. But those are not major themes. They're just the kind of daily reportage that makes you little to no money. It's not why you come here. We want longer-term trends that we can return to time and time again to make money. Tonight, I've got 7 of them. 7 tectonic shifts for 7/7, which happens to be July 7. 777. I thought it was cool. All right, anyway. First, this is one that doesn't get enough attention that David Faber and I talk about constantly. We can't believe no one thinks about it. That's an outfit called Engine Number One. You ever heard of them before this? They nominated 3 members for ExxonMobil's board of directors. They waged a proxy fight against management on the premise that the world's biggest oil company wasn't doing enough to protect the environment. And they won. The whole battle only cost them $12 million. John D. must be rolling over in his grave. The Engine Number One win was a major wake-up call to anyone who thinks you can safely ignore environmental, social, and corporate governance-focused investing. That's ESG for short. To me, it says, if you're destroying the environment, we're coming for you. Be prepared for a challenge. If these guys could spend just $12 million to win 3 board seats at the most storied oil company of all time, you better believe their strategy will be repeated, especially since it looks like the index funds sided against management. Second theme that's built to last, the hybrid workplace. And one of the most surprising aspects of the pandemic was that the ease with which businesses embraced not coming into the central office 5 days a week. What started as an emergency measure has now become commonplace. Even as the world goes back to normal, many people continue to work from home. Nobody saw this coming. Don't tell me you did. Home and retail sales have spiked as people spent their stimulus money setting up home offices in the suburbs while buying entirely new sets of clothes. They moved to the country. Some banks are insisting that people come in to install a sense of teamwork, but it looks like the majority of large enterprises have accepted that hybrid work is here to stay. They didn't twist their arm very long. Now, that has caused a boom of so many things. Housing, cars. It's a major reason why inflation spiked earlier this year. Fortunately, Fed Chief Jay Powell obviously understands that the spike in demand caused by the transition to hybrid work is temporary once we're all transitioned. So there's no need to raise interest rates because of that.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.